What up, investors? I got an exciting one for you today, all right? We're going to talk about Coinbase. I'm going to do a shallow dive on Coinbase, and boy, this had me for a run when I was looking at it. But before I start, look, it's been about 10-15 seconds into the video, and there have been no edits. So not only are we going to look at some numbers and have some fun talking about shallow dives into what the numbers can tell us about Coinbase, but I'm also going to help you with your social skills. We're going to teach patience today, okay? You're going to be as patient as me. So let's run through the numbers. We're going to use a very famous, very scientifically proven system of the of the kitty rating. Okay, so we're going to do kitty ratings for Coinbase. We're going to talk about, revenue trends, earnings trends, all these statistics here, and we're going to rate them one of the three categories: approval cats with a thumbs up here, bored kitty, or a sourpuss. And so we'll try to figure out whether Coinbase is a good investment. Now, this is an extremely serious business, so please take your time to, review all the cat ratings to make sure that you are, we're going into the appropriate category. If you disagree with me on any of the ratings, please let me know in the comments, and we'll make the proper adjustments. Maybe we'll have another video about it and see what we can come up with with the hive mind input in mind. So let's go into the stockanalysis.com. Now, I like to use stockanalysis.com because it's free and it's very informative and it's pretty accurate, with one little glitch that I found when I was doing my pre-homework here, my 15-minute pre-homework before I started recording. And I'll show it to you in a second. But I really like it. I'm definitely not affiliated with it, or anyone else for that matter, just me. So I just like to use it because it's a good website. If you have a better one to review stocks, let me know. But this is what we're going to be using today. So first, at a glance, what's going on here with Coinbase? Coinbase is down on the year 85.83%. As many of you probably know, Coinbase, if we go to the profile, is basically a company that facilitates cryptocurrency trades and things like that. They hope to enable the ecosystem to build crypto-based applications and securely accept crypto assets as payment. Something that PayPal's trying to do, through Venmo and PayPal, both of their apps. A lot of people are trying to do that. Square. So they have quite the competition. I like to think of Coinbase as just basically a marketplace for trading cryptocurrencies and other crypto, assets. But, they like to think of themselves as a payment software. So whatever floats their boat. Their sector is the financial sector. They have about 4,000 employees. It was funded in 2012. I actually remember when Coinbase was founded, not funded. There was some people on the message boards, like back then. I don't do crypto anymore, but back then in 2011, 12, I actually used to be much more involved because I just couldn't believe people would give me money for just turning on my computer for a while. And so I started looking quite a bit into it. I did some mining myself. I stacked up some graphics cards and all that good stuff. I bought some ASICs back in the day to mine Bitcoin. So I know how the ecosystem goes. So it's quite amusing for me to see, Coinbase come from basically nothing. And on message boards, people were trying to sell and buy shares of Coinbase to each other. It was quite amusing. It's like, okay, I'm looking to unload 300,000 shares of Coinbase, or somebody else looking to buy 500,000 shares of Coinbase. Get me with the correct people, right? So, right now 500,000 shares of Coinbase would be quite a lot, even after the 85% drop. So there was some quite a big amount of shares being traded back and forth. Now let's get back on topic here. First thing I like to look at is not this, but look at this little square here on the right. It's the earnings and revenue trend. Now, if you just look at these three numbers here for 2019, 2020, 2021, you'd be like, oh man, this is the best company ever. It went from 500 million revenue to 1.3 billion to 8 billion revenue in the span of 3 years. And look at these earnings, 3 billion in earnings in 2021. This company's pumping, right? So I'm like, okay, this is crazy. So let's see what happened this past year. And that brings me to our first criteria. We're going to talk about revenue trend. Okay, so let's see what's going on. We're going to go into the financials. We're going to click on revenue, but look at this revenue, right? Great. Okay, but we're going to go to quarterly to get quite a bit more definition, all right, of what's going on. And the story is quite a bit different. So their peak revenue quarter was in the last quarter of 2021 with 2.5 billion revenue. And ever since then, they've been on a downtrend, 1.166, 800. In this most recent quarter, they've only had $600 million in revenue. That's pretty poor compared to, 2.5. That's, almost 5 times lower, 4 times lower. I can do math. 4 times lower. 4x lower. That's crazy. So the revenue trend, and that is exactly what we're doing here. Revenue trend, not current revenue. Revenue trend is definitely a sourpuss. Definitely. I mean, absolutely brutal decline here in the last year. So the next, we're going to look at the earnings trend. Earnings trend. So we're going to go down to net income here for the company. And now the earnings, I mean, they used to be pretty spectacular. Like you saw, they made $3 billion in 2021 in earnings alone. Now that's reversed, and this year they have negative 2 billion. So complete 180 when it comes to earnings, complete destruction. There's a little uptick here from negative 1 billion to negative half a billion. But to be fair, I mean, going from 3 billion to negative 2 billion is quite the reversal. The trend is looking pretty poor. So I'm going to have to do another sourpuss rating here. We're going to do 2 sourpusses. Oh, this is looking bad already. This is looking bad. All right, let's see. The third one is going to be the dividend payout ratio. Well, obviously it has no dividend, no payout ratio. Now, we can't knock it down just because it doesn't have a dividend. A lot of growth companies don't have dividends. They like to, actually even sell shares in the open market continuously in order to fund their growth. I don't know how much potential Coinbase has to grow. It may be near its peak, maybe not. But the point is, you don't need to be paying dividends to necessarily, like if they were paying dividends and they declined and then they got their dividends put them in trouble, then I would put a sourpuss rating. But I feel obligated to give them a board kitty because they just have no dividends. Next, we're going to look at share buyback trend. That's what I was talking about. So share buybacks, we're going to look at the shares outstanding. And quite frankly, nothing's going on here. They tried to buy back some shares here in 2022 in the first quarter, but then they had to issue some more, probably because their cash balance was getting low and they needed some cash. So we're going to have to go with a board kitty. There's nothing going on here with the share buybacks trend. Oops, that's 2, not a 0.2. Well, 0.2 is 2. Okay. So next we're going to talk about cash on hand. Now this is interesting. Okay, this is where the wow button, came. My eyes popped out, peeled like oranges. And I'm like, what the hell is going on with this company? So when I was looking at the cash, look at what's going on here. Market cap over enterprise value. Just look at these numbers. 12 billion market cap, negative 84.9 billion enterprise value. And the difference between those two, it's supposed to give you like their cash balance. But there's more to the story. It's an accounting, non-clear, misunderstanding or misreporting, or I don't know how they do it, but I'll clear this up in a little bit. When we go to their balance sheet, look at what's going on here. Cash and cash equivalents, 100 billion. 100 billion. Versus the entire company is worth 12 billion. So how is this even possible? Right? Total debt, 4 billion. Right? Net cash, 96.9. Incredible. Now I'm like, that can't be right. That just cannot be right. So we're going to the financials. Going to the balance sheet. We'll do it quarterly. Then we go to cash and cash equivalents and look at what's going on here. It and This thing just skyrocketed from 6 billion to 94 billion. Where the hell did it get $90 billion cash infusion? A $12 billion company getting a $94 billion cash infusion, and then it's growing to 100 billion. Like, what is going on here? This cannot be right, yeah? Look at this. Total current assets. Explosion. What happened? Did the Federal Reserve just give them 90 billion? All right? So I'm like, okay, I have to do more research into this. This cannot be correct. So I went and looked at their 10Q. 10Q is basically their quarterly report that they have to do as a public company traded on the American exchanges. And so it's hard to see because, I'm going to have to move this. But basically, you see this $95 million number on the right. I don't want to move but it says it's customer crypto assets. So I'm like, I get it now. These are just the deposits that people have with Coinbase. And so Coinbase doesn't own any of that. But why it's on their balance sheet, I have no idea. It's not like Goldman Sachs puts, their investments of their customers into their balance sheet. They don't do that. So why is the company forced to do this? So it definitely is a head scratcher. And I'm like, okay, this is not some kind of rule. There's definitely some weird accounting going on here. So basically, they're treating the money that you put in with Coinbase as Coinbase's cash, and also their liability, of course. Otherwise, it wouldn't be fair. But it shows up in the accounting as cash that Coinbase can actually use for everyday functions. That's not the case, with other firms. It's just assets on deposit with Coinbase. So I guess that accounting rule was changed to reflect that in the company. But you'll see the 95 billion down here in the bottom as well. That's the liabilities here, and this is the asset here. I know you can't see on the left, but I don't want to move the screen right now. Okay, so that's explained. We understand now why this is skyrocketing. So all the metrics basically are off because of that little accounting change. So what we're going to do here is cash on hand. We're going to do another board kitty because they just have a little bit of cash. They have about 5 billion in cash, and they have about 3-4 billion in debt. So they have $1 billion in cash. So that's another board kitty. Nothing going on here with the cash. Can't knock them down. You can't tell them they have a bunch of cash. It's not outstandingly, positive cash, 1 billion. They're going to need that because they're burning through cash like crazy right now. They're losing, a couple billion a year. It's ridiculous. All right, so cash on hand, price to earnings, board kitty's non-existent. They're not making any money. Well, actually, that would be a negative, right? I mean, if they're not making any money and they were making money, this is a sour plus for sure. So price to earnings, enterprise value over earnings. So enterprise value over free cash flow, all these metrics. Like, look, if this was just a growth company, right? Enterprise value over free cash flow, non-existent. If this was just a growth company that hadn't made money before and just kind of on a straight trajectory, I would understand it. But they were profitable majorly, 3 billion, and they couldn't figure out, whether it's in their control or not, how to continue to make money. So because of this volatility on their earnings, it's quite deceiving to the investor, and it makes investing in this company very difficult. So we're going to have to give it another negative. I'm going to have to do another sourpuss here. Okay, profit margin. Let's take a look at the profit margin here. Now, because the financial is going to have, its profit margin is going to be like 100%. I'm sorry, not profit margin. Their gross margin, 100%. And then profit margin, ouch. Ouch. Okay, so it used to be like as much as 71.4%. And then it hung around in the 30s for a while. And then this year, with the demise of the entire crypto market, it reached as far down as negative 135%. I mean, that's horrendous. And now it's negative 92. So negative 135, what that means is that if I make $1, okay, I'm not just paying $1 to make that dollar. That would be zero. Okay, let's say I spend $1 to buy a Sourpuss Kitty mug on Spotify or Shopify, and then I sell it for $1, and then my net is zero. That would be zero. But what they're doing here is they're selling a cup, a Sourpuss. That's a good idea. A Sourpuss mug, for $1, and they're paying $3.35 to do it. So it's major loss. Incredible. Okay, so that's definitely a Sourpuss here. We have too much rating. What's going on here? 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. Profit margin trend. We saw it's we're just gonna give her a board kitty here because it's been low for a couple quarters, not really improving that much. And story. Okay, so the story of the company. Now, how do we quantify the story? Well, first of all, this company, as we know, is very much tied to the entire, crypto space. There's a couple of things that make it tied at the hip. I mean, one, if the cryptos are trending up, then the total overall volume of wealth, let's call it, being traded on the Coinbase exchange is going to go up, right? Their accounts deposits are going to go up. Their trade commissions are going to go up. Basically everything goes up. So on the way down, though, it's a reverse effect. So basically, this company is leveraged to the crypto space. Everybody knows the company. They're one of the first cryptocurrency exchanges to be listed on the stock exchanges. So I would have to say the story is actually quite exciting. So when we go to the kitties here, we're gonna give it an approval cat for the story. But look at this, guys. All right. It's not a pretty picture here for this company. This could flip, and in 2001, if we were to do the same analysis, this would be drastically different, right? This company would be pumping on all cylinders. I mean, they're earning like 50% of their revenues. They're just absolutely insane. I mean, not just all cylinders, like 20 cylinders, okay? Turbocharged, 20-cylinder pump. It's crazy. But right now, this is the reality. So what I would look at this company is a leveraged bet on the crypto space. So if the companies in the if the entire crypto space is doing well, this company is going to do dramatically well. But if it's not doing well, it's going to do what it did in the last year. And it's going to be a bit of an embarrassment. So that's how I would look at it. Do I think the companies go away? Probably not. I mean, they have $1 billion of cash. I'm sure there's plenty of investors that are willing to keep it alive for quite a bit longer. But is it a good investment? I don't know. That just depends on your outlook on what they're able to do. Are they going to be able to pivot? You're just going to have to do a lot of research on what their management, what their leadership is planning for the company, and also where the space is going altogether. Because a rising tide lifts all boats, but it also works the other way around too. So hopefully you learned something about this. It definitely gave me a little bit of insight when I was looking into this. I don't know, for example, why they're treating account deposits as cash on hand for the company. That's really dubious. Like, that's really suspicious. As the young kids used to say a year ago, that's really sus. Young kids. So anyway, I don't know what that's it. If somebody wants to do a little further research on that and let me know why, please comment down below. Or if you have any questions or you disagree with my kitty ratings, comment and let me know. All right, that's it. Peace out.